Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 12th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environments, and how those come in to impact the markets with some of my market analysis. I do the same thing for you folks in these market commentaries, but I also talk about the option strategies I'm implementing into my portfolio based on those assumptions I come up with in my market analysis. For you folks, what we've done is streamline the process for you to find the optimal option strategy for any given assumption you have. So please check those out. We aren't just picking an option strategy out of the hat, a long call for a bullish assumption. No, we look at the pricing. So that is the key aspect to finding any optimal option strategy in order to increase your probabilities of success. Also, finally, smash that like button for me if you would down there at the bottom. If you take anything away from this, we do really appreciate that. So please help us out there. All right, so economic data across the pond. Industrial production out of the European region comes off a little bit to 0.1%. Expected to be 0.8% and a revision to last month's number. So almost missing by a full point on that headline number there. Another thing to note here is we've been seeing these PMI numbers, purchasing managers, expecting higher or more than expected, what we would expect maybe in demand for some of these products. Well, the industrial production is cutting back. So why are they ramping up their the production managers purchasing and then not really producing? There's a bit of a disconnect there that we're going to have to start keeping an eye on there. All right, so let's move back here to the United States. We got consumer price index in at 0.8%, expected to be 0.2%. That is decade highs numbers there. Something to note, we did hear Clarita speaking earlier today, talking about some of this inflation, because that is headlined everywhere, folks, right now, is the inflation is running really hot. And the Fed governors have talked about this inflation running hot, but is it transitory? And transitory just means short duration. Are we just going to see this pop in inflation and then it comes back to normal? We did see 3-year expectations at around 4%. So that is pretty darn hot, if you ask, and doesn't feel transitory when we're looking at 3-year outlooks or longer duration outlooks there. And then we stripped out some of the food and energy, which is usually a more volatile aspect of this. If you think about it right now, we're seeing grain prices really bounce around right now heading into the summer. We're also seeing coffee prices really jack up as we're not seeing a good year out of Brazil and those areas that are producing coffee. So those types of commodity prices are running hot. We're also talking about energy. We can see crude oil, when we've been talking about it, in the 60s. That is inflationary. So when we take some of those transitory aspects out of it, we actually even see it just elevated as much. So that is a little bit concerning. So core consumer price index coming in at 0.9%, expected to be 0.3%. No revision to last month's number, but that headline number getting a little bit high quickly. All right, and then finally we got crude oil inventories, a build of drawdown of almost 500,000 barrels, but it was supposed to be a drawdown of almost 2 million barrels or just thereof. So less of a drawdown means somewhat of a build over expectations right there. Thing is, we're seeing some elevation here in crude oil. Why? Because we're seeing this whole supply glut on the East Coast. People lining up, already starting to see gas stations say that they are out of gas. All right, so those are some things that is driving the angst from the East Coast. Not really seeing that here on the West Coast so much, but that is the pipeline that really runs down the East Coast all the way to Florida. That was the one that was being hacked and is causing the issues. All right, so crude oil, we can see here just slightly higher on the day as the broader markets across the board are in negative territory. We can see the bonds here down a point, breaking below that 50-day simple moving average. Gold, I'm really surprised, especially with the inflationary numbers. We saw that it is massively down on the day. Well, not massively down, but down $13 on the day, but not holding a tick. It just seems like every tick is down. So opportunity here, I think, when we see this market kind of roll over, finding a bottom here, I think is going to be a great opportunity to take advantage of an asset which is a flight to safety and an inflationary hedge. So I think that those are things that are still going to hold true. Traditional assets like this are going to end up finding their way to some bullish moves here, especially if the broader markets are falling off like the Bitcoin. Everybody angry today, unless you were long VIX, because it's back into the 20s. Well, it got back into the 20s yesterday, and we got a nice strong move at the end of the day, making most of these equity markets look like we had found a bottom here in NASDAQ. I talked about if we found that bottom or finished right in and around where we were yesterday, it was going to look very strong. And it did today, no confirmation whatsoever, and the market just getting the rug pulled out from underneath it. That whole sector rotation not really holding true here, with the Dow Jones Industrial Average falling off as well. So, we've been seeing in and out of tech, from tech to blue chips to tech, and back and forth, and seeing that volatility. And I've talked about that. I think that that is going to be a theme of 2021, where we don't really go anywhere, but we get these nice little rallies, sector rotations. All of those things are healthy for an equity market, especially for a long-term equity market, folks, because the valuations start working themselves out into a more realistic data point, if you will. All right, so we can see that Dow Jones is off on the day. E-mini S&Ps continue to make a slide. I think there might be one green candle in this next chart that we show up here today. Oh, we're building another one today, right now anyway. But you can see E-mini S&Ps overnight pretty flat. They flush themselves out, so I would say that they were pretty flat. But seeing the economic data coming into today in the United States is a little bit concerning, and you can see we only got one green candle there on the chart. So really bearish today, and with this, I'm going to wait to see how all of this is going to shake out, folks, because right now, even in the NASDAQ, you can see we're breaking below some of those key metrics that we talked about that would act as support. We've blown through those. Now the point of control is the next stop. 12,500 even is looking like where NASDAQ should find its next support level if we settle in and around or below this today. So weakness across the board. We could even look at things like the SPY, SPX, any of those. When I was looking for some charts where you strip out basically the overnight noise, yesterday was looking like a really nice solid bottom here, and SPY was looking to add some positive deltas here. But today, again, like I said, we have broken down through that that candlestick that should have acted as a bottoming area and blown through that. So it looks like we are going to go back down and test those this trend channel that we've talked about, and the 50-day simple moving average. Buying opportunity would be when we get down in and around this support level here, the trend line there. All right, that's all I got for you guys. Like I said, tomorrow we're going to be doing a webinar. That's when I drill down on each individual option component for you folks, showing you how to spot the optimal option strategy for any given assumption. So please check that out. We'll be doing that tomorrow right after the close. And smash that like button if you would. And if you can't take that, take it easy.